It's a mixed picture that is emerging on the Asia-Pacific screen.
I think on the downside, this is the level to hold. 23,460 to 23,500, right?
Our current sentiment is more positive on CY25.
40 at start on the Nifty. So yeah, 40 points, 23,560. The sensex is up about 120 points.
You know, listen, when markets fall, the safe havens are usually FMCG, IT and pharma, and that's probably what we've been seeing more recently as well.
This is the amount that has been sought, though it's being indicated that the under-recoveries by the end of the financial year could be higher.
There has been a recovery of more than 100 points from the day's low. The day's low today was 23,344, so 140 points up from that level.
Till the Supreme Court gives a final judgment in this matter, no further action under those show-cause notices can be taken by these tax authorities against the gaming companies.
How long can you stare at your wives? How long can the wife stare at your husband?
Volatile day on the street with the Nifty staging a massive 250-point recovery from the lows of the day. IT stocks lead the buying while banks underperform.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Last hour of trading coming up, and of course you saw a sampling of what has gone on in the market through the course of the day. Up, down, up for a little while, but down again. So there is selling pressure, and we're back to where we were in the first 2 hours of trade. 100-point cut on the Nifty, 23,435. This is Closing Bell. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good afternoon.
Hi, good afternoon. I think the bulls will just want this 1 hour to get over and for this week to wind up, right? It's been difficult. I mean, not just the Nifty, mid-cap index, bank Nifty, it's just been all over the place. Though today there was some recovery, but now, I mean, I don't know.
I think the bulls have done more than 90 hours this week. Kind of, you know, throughout the
bulls
night.
Are like, please, can we go home
trying
now?
to dissect numbers, hours, I'm sure. And over the weekend, if you end like this, you add quite a few to the kitty. It's going to be quite a difficult, it's been a difficult phase for the bulls. Let's, take that on board.
You mean bears have done more than 90 hours?
No, the bulls, no. The bears are happy, they're sleeping well. The bulls have to do the analysis, try to come up something better. You know, the bulls are saying, let's dissect it.
Image of a zoo in my head. Okay, well, it's tough out there. There is no two ways about it. And, the point is, there can be general views that, well, things may look up and, it probably will look up at some point. And we've had various people from brokerages, etc., joining us, telling us that. But over the last 1.5 odd months, actually, I would say last 2 months, if you ask, I think 90% of portfolios perhaps have not made any money. I mean, have they lost money? That's, of course, will vary. But generally, it's not been a great period at all. And the way we have started this year has not been all that great as well. So broader markets are seeing a fair bit of damage. The high in the Nifty, by the way, it's a lower high. Yesterday, it's a lower high and a lower low as well, which we've seen now. The December low is gone. We're at about 23,400 now, and the high is about 23,600 today. So that's broadly the picture and the pain. While the Nifty and the bank Nifty actually saw a bit of a rebound during the course of the day, broader markets have not. The mid-cap index is down clean, flat 2%, and it stays there, which means it's the day's lowest point. And similar picture for the small cap index as well. That is down 2.5%. So broader market damage, very much an ongoing theme.
Absolutely. Look at this. I mean, 1,100-point drop on the mid-cap index, and the week's cut just on the index, by the way, is 6%. I mean, we're not even getting into individual stocks for the week, but it's been really painful, to say the least. On the large cap side of the screen, tech has tried to battle all the way through, obviously not very successful. But TCS has still managed, for instance, a 6% up move today, post the numbers. And the others, Tech Mahindra, Wipro, HCL Tech, Infosys, a lot of these stocks are still holding on to their gains. There's been some sort of an attempt of a firefight from the FMCG names, Lever, Britannia, a little bit of green. But again, it's not really been enough. The problem for the market is not just mid-caps, the banks. I mean, banks are such a huge part of the large cap index. And 800 points still lower on the bank Nifty. So that's been looking really, really difficult as well. I'm just glancing beyond banks. What else stands out? Trent has had a very rough week as well. Trent is down 2%. Trent is down 11% for the week. And that tells you that I think wherever there are profits, People have been rushing in to book the profits, take it in the bag, and then perhaps redeploy, come back to the market at a later date.
Well, and and some of those leaders in the up move, they're coming for some profit taking. Case in point being an Angel One. Just take a look at that stock. It was trying to show some bit of a fight back. It's corrected a goodish bit from the recent peak, but that as well has come in for selling pressure. Another one is BHAL. You've been hearing sound bites about some potential good news coming in there every few days, but for the time being, the market is ignoring it. BHAL is now at the low point of the day. So that's the kind of market we are in, where some of these stocks, after seeing a big run, now suddenly you're taking a closer look at fundamentals, trying to come up with reasons. But there is some selling on the screen, as you can see. Even REC, one of those stocks that went up, I think, 4 to 5 times in a matter of around 3 years. That as well has moved to the low point of the day, so keep an eye out on that stock as well. Let's get a technical check, though. We have, Mitesh Thakkar, who's back with us. Hi, Mitesh. Good afternoon, and good to see you in. The bulls will be extremely nervous. I think today's bounce actually could have been a good shorting opportunity. What's your view? Where does support come in at? And at 100 points lower, what is the trade?
Yeah. So, good afternoon, Ajit. One, I think the support was 23,510, 350, which is where the market had made a closing low on a daily basis way back in November, 23,349. And we kind of bounced back, from around those levels, and then, again come down again. So I think the problem is that the structure of the market is slightly on the weaker side, especially the Bank Nifty. If you look at the weekly chart, the Bank Nifty is down by about 4.5%. And that is where the majority of the pain is coming from. And I still believe that there is more downside left. So we will still advise, to look at bounce backs to sell in the Bank Nifty. My belief is that the Bank Nifty, could possibly see a decline to about levels of 47,400 to begin with, and in the worst case scenario, even 46,500. So there's still about 1,200-1,300 points which could happen on the Bank Nifty, and therefore I think this problem. The Nifty, on the other hand, managed to make a low of 23,344 and bounce back from there, but that bounce back is also coming into pressure, partly because of the Bank Nifty, and barring IT, I think not any of the indexes giving it support on the upside. So 23,350 remains the key level on the Nifty. We are only about 60-70 points away from there. So shorting may not be the best idea right now, but doing some put spreads, especially in the banking side, is what I would recommend. So I would still, believe that it's the financial name which will possibly cause trouble in the coming weeks.
Okay, all right. Mitesh, that's on the index. Now, for the last hour, what about stocks? Anything on your radar?
So on the stock side, I believe that we could, see a sell in Aurora Reality. I think that's a stock which has broken down big time today. So keep a stock about 2180. Look for targets of around 2060 to begin with, and maybe we can, eventually we'll get lower levels. While ONGC, after a good rally, is giving 2 days of pullback. So to just counter the short positions, ONGC could be a good long bet over here. This chart is very good. The stock is showing strength and it's now given a pullback. So buy here with a stop below 257 for targets of 275.
All right, Mitesh, got it. Thank you very much for the calls. We'll come back to you for some more ideas, in about half an hour's time. But let's talk about the big, market news story. And that, of course, is the TCS reaction that we had to the numbers. The IT season has started off. The mood is still very somber across the street. But, for what it's worth, the season has started off on an optimistic note. And that is because, it's not just about that top-line sluggishness. It's about the fact that margins expanded. And more importantly, the fact that the company sounded so optimistic in terms of the future growth prospects as well. We have Reema joining in to detail what all worked for TCS this time around.
Well, TCS earnings were just the start. Look at next week's earnings calendar. HCL Tech, L&T Technology, Infosys, LTIMindtree, Wipro and Tech Mahindra, all the large cap IT companies report their numbers next week. Now, today, TCS's up move, and a very solid up move, was led by, one, its recent underperformance, Two, its valuations. Now, Infy valuation was more than that of TCS, where historically TCS always commanded the premium. So investors said valuations are now attractive. The management noted the improvement in discretionary spends. Deal wins went up by 26%. And also more importantly, the management, which generally has been very shy of calling out, even qualitatively or quantitatively, any kind of guidance, said that FY26 is going to be better than FY25. And this is an important statement because the BSNL deal runs off, which is expected to contribute about, close to about 2.5–3% this year. So that has to be backfilled, and clearly the management is confident that there are other opportunities. But you know what? Barring a TCS and LTIMindtree, all the other large cap IT companies have given you a return of more than 30% in the last 1 year. So after this kind of an outperformance and today's up move, what is it that the street will watch very closely? Of course, you'll watch the commentary, etc. But if there is a guidance upgrade by Infy and HCL Tech, so currently the guidance which is given by both the companies is fairly large. It's a wide range. So for HCL Tech is 3.5% to 5%. For Infy also is 3.75% to 4.5%. So if the lower end of the guidance is raised, it's unlikely to excite the street. But if the upper end is raised, which means for Infy, if they talk about at least a 5% kind of a top line growth at the upper end, HCL Tech about 5.5% on an organic basis, then the street would be very excited. Also note that today the large cap IT stocks have led the rally. The gains in the mid cap IT stocks, whether it's Persistent, Emphasis, Coforge, pales in comparison, which just reminds you of the fact that mid cap IT has already seen a bigger run up. ER&D companies, so not just KPIT Tech, but all the ER&D companies are under pressure, whether it's KPIT, Cyan, Tata Tech. And this underperformance of the ER&D company comes on the back of a long streak of underperformance. The whole of last year, these companies gave you a negative return of about 10 to 30% at a time when the IT services companies rallied.
All right, Rima, thanks very much for that. Well, we caught up with the TCS CEO and MD K. Krithivasan to get some post-earnings insights, and he is sounding fairly upbeat about the demand environment. Take a look.
Our current sentiment is more positive on CY25.
So do you think FY26 will be better than FY25?
It should be.
It should be. And client budgets have closed?
I won't say it's closed, but based on the initial conversation with our teams, at least the budgets have a positive upward bias.
All right, that is TCS, and that's the bright spark in today's trade. Otherwise, it's been a difficult day and a difficult week. We have now Prakash Diwan joining in. Prakash, first of all, tell me, how many hours do you work? Is it 70, 60, 80, 90? Then I'll talk to you about TCS.
So you just need to add up the hours that I need to prep for the shows that I do with you, and that's about it. So it'd probably be quite abysmally low for a lazy person like me, and that's exactly why I'm not in a very large big company.
But to each his own or her own, right? But you're in Goa, you're making money, you're buying the right stocks, it's working for you. So 90 hours or 9 hours doesn't matter, right?
Prakash, the role that you're in, you have helped hundreds or thousands of investors, via the television, via your conferences. So hang in there, mate. You don't need to do 90 hours.
Exactly. 9 can be good enough.
I've learned personally as well, Prakash.
All right. So, okay, now let's talk about the learnings from TCS. We're trying to be optimistic and bright here. That's been the only green spot in the market today, Prakash.
Yeah.
So what do you make of it? I mean, today's reaction is very, very expected, or along expected lines, because the stock was sort of priming for weak growth. It got that, and then now the commentary is positive, so it's reacting upwards. But what after this? I mean, would you be a buyer of anything in large cap IT?
Yeah, that's the $1 million question. We are right. So two things that I would attribute to this behavior today. One is the numbers tell you that most of the metrics seem to be indicating a clear bottoming out of the slowdown that TCS has. Essentially, TCS has gone through, not just the sector. Second is there is always money waiting in the sidelines to be deployed. There's been so much of profit booking. People are happy to deploy if they are very clear on the visibility of growth for any large business. And TCS actually offered that after the commentary, and Prashant and Rima actually quizzed the management without probably giving out numbers, they've indicated enough that things are looking positive for 2025, calendar 2025. And that is great news for somebody who's waiting to deploy. Because beyond a point, all this profit booking that's happening, so you can't be justifying sitting in cash beyond about 15, 18, 20% for especially the institutional investors. So these are opportunities that they would lap up. And we need to give to TCS the fact that it was beaten down much more than the larger names in its peer set. So there is always some room for correction. But would I buy now? Absolutely not, because till 20th and beyond, till we are very clear about what's going to happen. Imagine a bomb that hits you after the 20th saying H-1B visa, there's a different regime. Trump could kind of keep, having these seesaws on views and policies. And then you will start scrambling for shelter. So let's not do that. And especially the smaller companies, Tata Elxsi, has given a very clear indication that there will be a valuation reset for some of these niche players as well in that genre. So wait for that also, that correction to pan out. And then, February, you could start looking at new contracts, which make a lot of sense to ride along.
Okay, all right. Prakash, the other one we want to talk about is Delta Corp. But before we ask you that question, let's actually get the news to our viewers, right? Looks like relief, but it's in the future. The Supreme Court has stayed the GST show cause notice totaling 1.12 lakh crore rupees and intends to hear some of these matters later. Ashmit is here with details on this one. Ashmit, take it away.
Well, the gaming companies have been hoping for relief since 2023. The core concern that they had and that they expressed before the Apex Court is that during the pendency of this case, there was a worry within the industry that the tax authorities may start recovery proceedings with respect to that figure that you pointed out, 1.12 lakh crore rupees. That's the quantum of the show cause notices in question, spread across 71 companies. Now, this argument about potential coercive action appears to have struck a chord with the Apex Court, the Supreme Court, seeing it fit, saying that, yes, this is a matter that is fit for final hearing, but until we decide this case, it's important to grant interim relief. So while the Supreme Court is deciding, no coercive action, no recovery proceedings can be initiated against these companies with respect to that quantum of 1.12 lakh crore rupees. Of course, the issue at hand is the August 2023 amendment to the CGST Act, which essentially allowed for a 28% GST levy on full face value of the entry amount. The question being, can it be applied retrospectively from 2017? That's what the tax authorities are arguing. The industry begs to differ, and that's the question. Hopefully, the Supreme Court will give clarity on as the hearing begins. The final hearing in this case will begin on March 17th. Back to you.
All right, Ashwin, thank you very much for that. Should we have high hopes on this one, that there will be some sort of a U-turn, Prakash? And any thoughts on Delta?
So, Prashant, these kind of news flow, these triggers that the news flow provides where the stock opens up high, with very high expectation, are actually the best opportunities for people who are stuck with these names to get out. Otherwise, there's hardly any volumes. You can't see much of absorption of the selling that you may want to do. But all that stuff that, we spoke about, we've heard about in terms of repair, there's so many ifs and buts that could still keep coming up. So I don't think buying into it is, of course, not making sense, but it is a good opportunity to exit and then use that precious capital to deploy somewhere else where there's very clear visibility of growth. Delta also has a huge element of competitive intensity, and I can tell you it's no more, what it used to be a few years back where it had footfall and it was assured of business. Today, the competition is quite severe. The kind of cost of marketing themselves is going up so dramatically high. So lots that's not yet in favor of the name.
Okay, all right. Any view, Prakash, on Piramal Pharma? The stock, I think it went through that corporate action listed at 180, and from 180 it went down, I think, to 60. 60, we saw 280 after that. Now it's back at 220, and many believe that maybe, in fact, the best of profitability and debt reduction is yet to come. Would you look at it at 220?
It does give some sort of interesting, the place it is in terms of its evolution after being separated is definitely very promising. But, that's a very similar situation to what's happening to a Laurus Labs. I mean, we've seen lots of yo-yo in terms of what could happen, didn't happen, should have happened, all of that. And things actually seem to be happening. The same thing happened with Newland Labs from his journey from 2000 to this 6-digit number. So those things happen, but it's about allocating capital that is definitely high risk, high reward. It's not something which you could do. The volatility could actually be crazy. The waiting period could be much longer. But yes, I do understand whatever I'm reading about the business is seeming like a very clear turnaround.
Okay, seeming like a clear turnaround on this one. Prakash, we leave it there for now. Thank you very much for joining us. It's a pleasure having you here on the program. I think the market will come up on your screens and we'll just take a quick look at what's happening on the Nifty. We started with about a 100-odd point cut and it's down 100. So absolutely there. Look at some of these reversals, right? Religare was up 5% yesterday, if you can have it up. It's down 5 today. So just completely on the other side this afternoon. I mean, actually through the course of the day today, just one name which has actually gone the other way a little bit is Sterling, Wilson and Solar. It was started lower. Stocks, by the way, halved. SW Solar. High was about, I think, 800 rupees and fell to about just over 400. A little bit of a bounce today, 2.6, 2.7% in the green. But apart from that, I mean, there isn't very much to take heart from. 400 stocks, 450 stocks actually are higher and 2,200 stocks are in the red. So it's a very large, very long list of big volume-led losers that we have. Just a few other names, right? Look at IREDA, 6.5% lower. Will come up on your screen. Adani Wilmar, of course, that offer for sale, 10% down. REC is a big casualty today. REC is down 7%, about 455. AG's Logistics, I think, had a very large move on the upside. Recently, it's down about 6%. BHEL is down 5.5%. And huge volumes on all these. Premier Energy is down 6%, 1135 on Premier Energies. So it's turned down very sharply in the last few days. High was about almost 1,400 and about 1,100 now. T-Taggart is down 5. We just spoke about Piramal, Hutco, PG Electroplast. Spandana is down 10%. So all those gains recently, not all, but majority of the recent gains on Spandana have been given back. We slip into a quick break here, but just also a quick reminder, we're counting down to the Union Budget 2025. The country is looking to seize the moment, establish itself as a global economic outlier. The upcoming budget will be in NDA government's first full budget after general elections and the victory there. Key to unlocking ambitions of millions of Indians. So tell us what you want from the budget by submitting your wish list to CNBC-TV18's budget box and tune into our budget headquarters, CNBC-TV18. Lots of insights, coverage on the day of the budget, 1st of February.
I regret I'm not able to make you work on Sundays, to be honest. If I can make you work on Sundays, I'll be more happier, because I work on Sundays also. What do you do sitting at home? How long can you stare at your wives? How long can the wife stare at your husband? Come on, get to the office and start working.
Well, that is the chairman of one of India's largest infrastructure companies, L&T. And those were the comments made by Mr. S.N. Subramaniam, and they have sparked a furor, an outrage of sorts on social media. The video that you just saw was him talking to employees during an internal company exchange, and it sort of went viral, went out. The video actually showed Mr. S.N. Subramaniam saying that he regrets not being able to make employees work on Sundays. He also questioned how long employees would sit at home and stare at their wives or husbands. The company is now standing behind him and has defended the remarks. In a statement, L&T said Extraordinary outcomes require extraordinary effort. But the condemnation on social media was swift, with people from all walks of life weighing in on the comment. Harsh Goenka of RPG Group called the 90-hour work week a recipe for burnout, I quote, adding that work-life balance isn't optional but essential. Actor Deepika Padukone said that it is shocking to see people in such senior positions make such statements. The L&T chairman is not the first to spark a debate over work-life balance, but this issue has divided India Inc., especially at the higher echelons of power. Mr. N.R. Narayana Murthy famously or infamously argued for a 70-hour work week. Speaking at the CNBC-TV18 India Business Leadership Awards, Murthy said that he actually stands by his original comment and will take it with him to his grave. So those are the kind of comments that we've heard. Let's actually just remind ourselves of Mr. Narayana Murthy's stand on this issue, and then we'll introduce our panel of experts.
I will take this with me to my grave. I am very proud of having worked very hard. I used to go to the office at 6:20 in the morning and return at 8:30 in the evening. That was 14 hours and 10 minutes. And I worked 6.5 days till I retired. And I'm very proud of it. Therefore, I am not going to take it back.
Now, Mr. Murthy and Mr. Subramaniam are not the only ones. Several other CEOs as well, including many young executives who are in charge of the so-called new age companies or internet-based businesses. They've also been arguing for a healthy work-life balance, but more work perhaps than life. Ola's Bhavesh Agarwal does not believe in work-life balance. He even called weekends a Western concept. Kunal Shah, who runs the fintech firm Cred, said that no big achievement can come with work-life balance, unquote. And these are all quotes that I'm, by the way, reading out. This is not me paraphrasing anyone. So why are so many CEOs across corporate India arguing for a 70 to even a 90-hour work week? This at a time when studies are showing that a 4-day work week perhaps is working quite well in many other markets, including perhaps in Japan. It is making employees even more productive. Japan has mandated now a 4-day working week for government employees, especially in a move to support working mothers. So where does India Inc. stand on this, and what's the way forward? Well, I have a full house with me, a full panel. Sanjeev Bikhchandani, founder and executive vice chairman at InfoEdge. Devina Mehra, founder of First Global. Piyush Pandey, chief advisor at Ogilvy Advertising. Also with us, Nilesh Shah, MD and CEO of Kotak Mahindra AMC, and Neeti Sharma, CEO of Team Leads Digital. Ladies and gentlemen, thank you very much for joining. And in our regular course of business, we talk to you about markets, about your companies, about your sectors and growth. But this is a very different discussion and a very, very important one at hand, because employees have lashed out on social media and they're asking, where is this really coming from? So let me take the opening thoughts from our panel first. Mr. Bikhchandani, if I could, start the discussion with you.
Look, first of all, I think I saw the video. I think it was half in jest. 90 hours a week is about 7 days a week. It's about 12 and a half hours a day. You can do it for a week or two if there's a crisis, if there's a deadline to meet, but I don't think it's sustainable 52 weeks of the year into a 30-year career. And I'm pretty sure the L&T chief himself did not mean it that way. He's motivating his troops, motivating his employees, asking people to work harder to achieve outcomes. And that's par for the course. I mean, Piyush on the panel, he's spent a career in advertising. I started my career in advertising. I know the kind of working hours that there are in advertising, and believe me, they are much, much more than 40 hours a week. But you don't do it because you're forced to do it. You do it because you like your job. You do it because you love it. You do it because that is what is required. Devina started life in Citibank. And she's an investor. And I'm pretty sure when Tokyo is open, she's awake. When Singapore is open, she's awake. When India is open, she's awake. When Dubai is open, she's awake. And when London and New York open, she's awake. So I'm not sure where this is coming from. But I would not be outraged. I would, say, yeah, fine. It's part of life.
It's fine. It's part of life. In a bit, we'll actually throw to a soundbite, because I was just speaking with Mr. Rajiv Bajaj on the matter, and he took a far more sort of human approach to it, and very, very different view to what Mr. Murthy and what Mr. Subramaniam have expressed. But let's ask Devina. Devina, like Sanjeev is saying, you track markets pretty much around the world. You interact with investors. But, is it that difficult to switch off? do professions like finance, and of course, media, we know how media works, Piyush, with advertising. I mean, these sort of industries aside, but even things like finance or technology, services, is it really important to work 70 hours, 80 hours, or 90 hours?
I don't think so. And I don't think, I mean, all studies will show that you cannot work productively for 70 or 90 hours a week every week. The human being is not capable of doing that. So that's very, very clear. It's I think, complete bunkum that on a consistent basis you can work like that. So you have to prioritize what is important. Yes, at the beginning stage of your career, you have to put in long hours, not so much in office. I'm not a believer in this, which was my employer Citibank's culture of just remaining at the desk for 9 or till 9 or till 8. But I found most people would waste time during the day and then show up just to show their bosses they were at their desk. So that is not a culture that I've ever encouraged in my organization. And I noticed that all the people who have recommended the 70 hours, 84 hours, 90 hours, I checked, all of them are married with 2 kids each. So this is very much a privileged gender saying this, that somebody else will take care of the home, somebody else will take care of the children, and I can work as long as I want. I think we must remember that if our aim, for example, some people are saying for nation building, no nation has progressed to a middle income stage without female labor participation. And we need to get more and not less women.
Yes.
So unless there is also a social revolution, which would mean that men also take care of the home and children. This is a very, very biased perspective that on a consistent, but yes, I mean, sometimes you are required to be there in the evening. I have done calls at 1:30 a.m. to a Boston client when I was on the sell side, and then taken a morning flight elsewhere. So those kind of things happen. But every week you expect people to be at their desks for that long. It's not productive. People need time to think. Yes, you have to put in the 10,000 hours to learn your craft, which might be outside office. You need to do courses, read books. All of that is real work. Just time in office is not work.
No, sure. And I'm going to come to Piyush in just a bit, because this has become such a massive media storm now, social media and on media as well. But let me take that point on women in the workforce with Niti as well. Niti, chime in on this. At a time when we're talking about it, letting women break the glass ceiling and generally more women in the workforce, prescribing and mandating sitting at your desk for X, Y, or Z number of hours, is that going to help the cause at all, or will it sort of drive women away? Because a lot of people, especially if we talk about sort of the employees at the lower rung or the middle rung, may not be as privileged as top leaders who have help at hand, who can get their children dropped to school, or who can have someone cook their meals.
Absolutely. And I think this is going to be detrimental for bringing in more and more women into the workforce participation, right? Purely while you say privilege, but we also know that the primary caregiver in any family in India today is still women. So that's not changing anytime soon. It probably may change a little bit in the urban cities. But in tier 2, tier 3 cities, it's definitely not changing. So even if we have help at home, the primary responsibility resides with the women. And if we expect a man and a male and a female colleagues to sit and spend 90 hours, clearly the female colleague will not be able to spend that much time, and it will actually work in the negative for her. So it's not practical for any gender, leave alone women. But if there's a comparison, women clearly will be left out a lot more than what it is right now. Incidentally, we are only at about 22-23% women participation in the workforce. In the IT sector, which is so-called the knowledge sector, and we have more flexibility and a hybrid form of learning, with still about 36-37% participation. So I think we have a long way to go, and some policies will clearly, leave a lot more women behind. And like Devina said, I don't think we can progress a lot more without having equal participation from the gender that has that much of population in the country.
Okay, Piyush, let me come to you now. I think a lot of people were very surprised by the company response Many would have imagined that the company will quickly, get into damage control mode and say that, perhaps this was taken a little out of context. But that's not what the L&T statement seems to indicate. They have firmly stood behind the chairman, saying that for nation building, this is really needed. What do you make of the big debate that's raging out there?
I think with a view like this from the chairman of a company, first thing they should do is to change the name to lynch and torment. That would be a better thing for them to start with, because there's a lynch and torment thinking. To my mind, the quality of work is not number of hours. It's not work-life balance. It's heart and mind balance. And if you have to appeal to the heart and minds of people to get the best work out of them, it's not because of number of hours. I'm sorry, it is completely incorrect. And if I am in advertising, yes, I can have weird hours. That doesn't mean that I work for 90 hours a week. There will be moments when all of us need to get into the thing and do something, as somebody else said earlier. We do it. But this is savage thinking. I think lynch and torment is a better name. Get back to reality. There are countries saying if the person is in a better state of mind, you get better work out. So it's a no-no for me. And the ladies out here, they're thinking I completely support it. And will you stare at your wives? Are you mad? What kind of a thing is that? I think you'll get into a situation like China where you are looking for kids. If you think of Chinese thinking. So get on with it, get best work out. Nation is built on good people, hard-working people, but not slaves.
Well, it's an uncomfortable looking screen, actually. The bounces are being sold in two, but a couple of stocks that have just moved to the day's high. I think Genius Power should come up for you on the screen. Big up move is what we're seeing. The stock has seen a substantial correction, but in the last few minutes, we're seeing a bit of an uptake on that stock. Good time of the day, though, to get in Nimesh, who's here to tell us what he's picking up in D-Street Chatter. Nimesh.
Hi, Nigel. Another down day, but the story this week was clearly the underperformance in the broader market names. The mid-cap index is down another 2% today. For this week, the mid-cap index is down 5%, small-cap index is down 6%, and individual names in the broader markets have easily corrected 15, 18, 20%. So that's the kind of pain, short-term pain we've seen in the broader market names. I guess that's more to do with the panic in the from the non-institutional investors. So retail HNIs, so-called family offices. Looks like that's more pain in the broader markets because of a bit of panic selling there. From the institutional side, again, it's a mixed day. We've been seeing throughout this week, every dollar of FI selling has been matched by the DI buying. So it looks like that's a kind of a day even in today's market. But it's the pain in the broader markets from non-institutions which is putting a lot of pressure in those momentum stocks. Technically, 23,300 is a level to watch out now. I've been saying for a while that's a very big crucial support on the downside. If that gets taken out, you will see further pain in the very short term. But given the positioning, given the PCR levels, a technical pullback is round the corner. But surely from a positioning point of view, there looks like there is panic now in the broader market names.
Okay, all right. Nimesh, any stocks on the list today?
Well, so a couple of stocks that I'm focusing on. The first name is Mazgaon Dock. Well, the stock has been consolidating in a narrow range of late. I understand there could be some corporate development very soon. Remember, the government still owns close to 85% stake, and maybe there could be an OFS on the cards to bring it to 75%. So that's the buzz as far as Mazgaon is concerned. The second stock is NTPC. Again, within the PSU basket, this is one stock has sharply corrected in the last couple of weeks and months, largely on back of selling pressure. I understand a very large leading global fund has been an aggressive seller in NTPC, so that's the reason why that stock has underperformed. The third name is Paytm. Quickly down 15% in just 3-4 days of trading session. Again, delivery volumes are quite high, and there I understand some P-note investors have been aggressive sellers, so that's the reason why Paytm has been under pressure of late. And the last name is Bajaj Finserv. Within the while there is panic across the street, Bajaj Finserv has relatively outperformed both Bajaj Finance and Bajaj Finserv, and largely because there is a bit of buying interest back in those names, and also for Bajaj Finserv, for second day running, I understand some global funds are active buyers, and that's the reason why it's outperforming today's market as well.
Okay, got it. Thanks a lot for that, Nimesh. Well, let's get in Mitesh back onto the show. Mitesh, you've got a couple of trading ideas for us?
That's right. Nigel, I think I have a few BTST names on the list. One of them is STBT on Paytm with a stop at about 853, short for targets of around 830 to begin with. And persistent, something is interesting me as is TCS. So between the two, I choose a TCS. BTST here with the stop at 42.44 for targets of around 14.95.
Okay, all right. Thank you very much, Mitesh, for that. And, I'll come back to you in a bit. Now, City Gas distribution companies, MGL and IGL, have seen an upgrade from MK. Mangalam is here. There's been a fair bit of flip-flop as well in terms of that gas allocation policy. And maybe investors have also gotten a little whipsawed. But today they're higher for what it's worth. Mangalam, take it away.
Well, earlier when there was a flop, there was an issue. These stocks were lower, and now there is a flip and these stocks are higher. That's exactly the sum and substance of this entire story, because the government has now reversed a significant portion of the APM gas allocation cut for CNG, to 51% of CNG volume with effect from 16 Jan 2025 from 37% currently. And on the back of that, MK has gone ahead and upgraded both IGL and MGL. They've upgraded IGL to add from reduce with a 17% upward revision in the target price as well. MGL as well has been given a buy rating from add and a 21% increase in the target price to around 1700 odd rupees as well. What MK says is that IGL and MGL may need to hike CNG retail prices by 4 to 5 rupees and 2 to 3 rupees per kg respectively to revert to pre-allocation cut margins itself. And the fourth quarter is expected to be a lot better for both these companies, driven by partial, reinstatement of APM allocation and perhaps some possible price hikes as well. They've upped their estimates, EBITDA per SCM estimates, by 7 to 10 rupees for IGL and MGL from 6 to 8 rupees earlier, and a 20-25% increase in consolidated EPS. So earlier there was a flop, now there is a flip, and as a result of which there has been an upgrade that has come by as well.
Got it, Mangalam. Thanks a lot for that. Well, mid and small caps, they've seen a severe fall this week. Hormuz joins us to dissect all those moves and the big fall that you've seen. Hormuz, take it away.
It's been a forgettable week for the bulls, regardless of the market cap size, be it the large caps, be it the broader markets. But there has been significant pain in the broader markets with 20 lakh crore worth of investor wealth gone this week. And this is not the first time in the recent past that this has happened. It's happened a few weeks earlier as well, before we saw a bit of a recovery, and then we're back down to where we are today. The mid-cap index is down 5.5%. The small-cap index has seen a bigger fall, down 7% so far this week. The Nifty 500 too is down down 4.5% this week. And if you take a look at the quantum of stocks that are down, you know, a 10% fall in a year would concern someone. Imagine a 10% fall in a week. 16 stocks in the mid-cap index, 33 stocks, almost a third of the small cap index is down 10% this week, and almost 85 stocks of the Nifty 500 are down 10% this week. Now, which are some of the big losers then? Look at KC International, Kalyan Jewelers, PB Fintech. What's common among them? All of them had doubled or more last year, and they have got off to the start of this year has been on the back foot for these companies. There are other names in this list as well, say the likes of Blue Star, which also doubled last year. Paytm may be up 60%, but it was up 3x from the lows that it made in 2024. That too is down 15% this week, as is Inox Wind. So a significant pressure that is being seen in the broader markets. Now, a pocket that has seen a lot of pressure within that is the PSUs. The PSE index is down almost 7% this week, and every other component of the PSU index has traded with losses. Look at these: REC, PFC, IRFC, BHEL, NTPC, all of them 10 to 15% lower this week. We spoke to a few analysts as well earlier in the day. They said that this correction in REC and PFC might just continue for a while longer as well. There is one stock though in the PSE index that has not declined this week, and that is ONGC. It is still held on to gains of around 1.5% this week. That acts as an outlier for the PSU stocks this week. A lot of the rise in crude oil prices, some positive brokerage commentary coming in as well, that has come to the aid of ONGC. But pressure in the PSUs, pressure overall in the broader markets, and that shows in the 20 lakh crore that has been wiped out this week.
All right, Hormuz, thank you very much. Very useful. I mean, stock taking as far as the week is concerned has been a painful one, really. Rupen Rajguru is with us, Head of Equity Investments and Strategy at Julius Baer. We also have Himang Jani, who's tracked markets for a long time, joining us now with some perspective. Gentlemen, good to have both of you here. Appreciate it. Rupen, if I can start with you, quick thoughts on the mid-cap and small-cap decline. And that is an area where Julius Baer works very closely. You've got a very large sort of coverage universe there. Give us a sense of the kind of damage you're seeing and what kind of conversations are going on. What's the dominant driver, if any?
Yeah, hi, afternoon, Prashant. In fact, from our own research perspective, we have been cautioning about the move which we are seeing in the mid and small cap stocks. So while from a company perspective and from the overall corporate performance perspective, there is not a significant change. But what happens is that when the overall markets get devalued, right, the segment of the market which has got significantly revalued is where we are seeing profit taking. And that is I would say that's par for the course. And see, what had happened is that in the last 4 years, we haven't seen any meaningful correction in the market, right? I think barring the month of October when Nifty was down more than 5%, people were not used to big corrections in the market. So I think this is something which usually happens with mid and small caps names. Whenever there is a little bit of uncertainty, I think that segment corrects the most. So from our perspective, we are sticking to our stance that this year would be the year in which the large cap will outperform mid and small cap names. And while 110 days is a too small a period time frame, but until and unless the overall earnings growth of the market, gets into a better trajectory, we believe the larger market would be in a range, and probably we are in the lower band of that range, and mid and small cap definitely will be under pressure.
All right. Hi, Rupen. Good afternoon. Good to see you, Ben. Rupen, give us a couple of targets then. On the Nifty, as you're mentioning, first half will be soft. You're hoping for a recovery in the second half. So for the year, what kind of return should someone be looking out for on the Nifty? And also in terms of your top sectorial bet, what could it be? Getting into this year, people are saying banks are well valued. There's plenty of opportunity out there. Well, that index is getting clobbered. Your view?
Yeah. Hi, afternoon, Nigel. Here, if you see from an index perspective, right, ultimately what we have to look into that, at what kind of valuation that index will find support. So say if I were to look through that, we were trading at almost at a 1 standard deviation higher than our long-term average. And if we get into our average, which is say 18 or 19 times, probably around say a tad lower than 23,000, say 22,500 or so, forms a very solid base for the market, right? Because that's where we will get the valuation support. earlier we had got re-rated because of the overall liquidity and the movement in the market. So if you were to ask me strictly from a range perspective, this year we expect Nifty to be in the range of say roughly 23 on the lower side and 26 on the higher side. That would be the kind of range that we would look into for Nifty. From a themes perspective, Nigel, there are a couple of themes. One theme which I already mentioned about a large vis-a-vis mids. But from other themes perspective, I think one thing which is clearly we are seeing at ground levels, one is the rural recovery. We have not only seen in the corporate commentaries, but also at ground level, we are seeing some bit of up move. And with more money in the hands of people, thanks to the welfare schemes, I think the low-ticket consumption items should make a comeback. And in an uncertain environment, even staples serves as a defensive. So in the near term, probably staples will be looking good. The second theme which we believe will do well in this current market would be, the mid to late stage real estate related stocks. So that would essentially be building materials, home improvement companies, because coming towards the end of this year, we will see a lot of deliveries getting through on the housing side. So while last 3 years, a lot of pre-sales have happened, finally the houses are delivered and people go and stay. So then the spending towards all the home improvement related stocks, so be it the pipes company, the ceramic tiles, the sanitary ware, the plywood, all we believe should see a pickup coming, towards the second half of this year. So that's the other theme which we like. And purely from a sectoral perspective, I think while you mentioned about banking and financial, we continue to remain constructive on that. But probably we believe this year it would be more of a market performer, because while barring one bank, a lot of the other banks last year did well. So probably the largest private sector bank still definitely has some juice, but otherwise the banking sector will be a market performer this year.
Okay, so staples, you like some of those rural players, so two-wheelers as well is what you're looking at, and banks could be market performers. We got that correct?
That's correct.
All right. Hemang, coming across to you. Good afternoon. Thanks a lot for joining in. I wanted to ask you about Kalyan Jewellers. What do you do with that stock? The update sounded good. It's actually outperformed what Titan as well has done. But clearly the street is very nervous on that stock. In spite of the clarifications coming from the management, street is not buying it.
I think some of these stocks which have run up quite a lot in last 1 year, and maybe my sense is that there may be a case of concentrated holding with some institutions or some HNIs, and maybe they are trying to basically exit, and the price impact is very high. The fact of the matter is that this theme has played out very well. The update has also been equally good, and it's not as if that the growth story is over, but it's a case of concentrated selling, it seems. So I would surely be looking at buying into something like Senco, Kalyan, even from a large cap allocation stock. I think Titan also delivered a very steady growth. So don't see any fundamental negative as such over there.
Got it. Okay. All right. One more stock, Hemang, if you could help us out with IRDA. The stock listed went all the way to 300. Now it's at 200, and these last quarter's numbers clearly look disappointing.
Yeah, so Nigel, I think overhyped kind of a story. The valuations, the overall expectations in terms of growth have been too high. Again, a case of concentrated holding. So while the numbers, NI level 38% growth doesn't look bad, but I think even at the initial stage, you're seeing, asset quality concerns, and how long this kind of a growth they will be able to sustain, one doesn't really know. So not too, positive on that per se. I think there are better opportunities in the listed space that one can really look at rather than buying IRDA at a very hefty price to book.
Okay, got it. We'll take a quick commercial break here. There's 9 minutes to go for close. And markets recovered a little bit. We're about 80 points lower. So from the low of about 23,340, we've come up a little bit or so at this point in time. So we'll see what the close actually is like. We're about 23,445, and the low is 23,344, beg your pardon. So yeah, it's about 100-odd point recovery from the day's low. Time for a break. As I said, we are back on the other side. More conversation.
Welcome back. Well, one stock that's seeing a bit of an uptick in the last few minutes is BSE. I think we should get the intraday chart on that stock up for you on the screen. Rupen, before we let you go, what's your view on some of these market-related plays? They've done quite well, and clearly the financialization theme will definitely play out. Your view on them?
Yeah, as they say, price is what you pay and, the value is what you get. So now everything is good but price. So whilst we are positive on the entire story, right? And what happens usually, market tends to extrapolate too fast, too soon in many things. So a lot of these capital market intermediaries, while we are part of that industry and we are very positive on the long-term perspective of that industry. But in the near term, probably considering a lot of these companies' revenues are linked to stock market, so a lot of the transactional revenue definitely will slow down. And and I know a lot of these probably that penetration story is also true, right? We have 18-19 crores demat account, 20 crores mutual fund folios. So while it can definitely go higher, but still I think the early thing is already done. So from our perspective, in the very medium term, in fact, last time we spoke about it, we have take profits out there. We are significantly reduce our exposure there, and probably will wait for better entry price into that. So we love the long-term story out there, but we'll be cautious in the very short to medium term of that.
I'm just looking at some changes here from all-time highs, right? I mean, the Nifty PSU index, PSU Bank Index, beg your pardon, has basically lost about a quarter of its value. It's down about almost 25% from its peak, the PSU Bank Index there. And actually, topping the list is, the other one is the CPSE Index, which is, of course, banks, non-banks, everything. That has lost about 23% of its value, CPSE, from its all-time high. What is done better, of course, is, by definition, the defensives. So the IT index is just 3% away from its highs, and the pharma index is just about 6% away from its highs. So there's the PSU pack on one side, and then there are, of course, these IT and pharma sectors, which are holding on very, very well. Rupen, in the IT services space, is there anything out there? Because we are, of course, on the cusp of the earnings season as well with what TCS has reported. Any thoughts?
So see, IT, if you look through, typically what happens in the market when there is maximum pessimism, and that's the time the sector bottoms, right? So before the actual good news, the stock actually, a lot of the stocks have gone up, right? For case in point, TCS, which came out with the numbers, while the numbers were still weak, but their commentary is kind of fairly positive. So here, a lot of these stocks have, they are good quality names. So in an uncertain environment, probably IT will be a good defensive. Plus, additionally, if the US discretionary spending, which is what the commentary also indicated today by TCS, is coming back, and add to it I think the important factor which we should not forget is the tailwind from weak currency, which is a stronger dollar, should also lead to better margin profile. So overall, they are fairly valued, and probably they have bottomed from an earnings perspective. But some of the names out there, from the moves which we have seen, we don't see a big upside, but I would say they are not a bad stock to own in an environment wherein, things are, macro is looking not that great.
Okay, all right. Very quickly, before we let you go, Hemang, your view on DMart?
Michael, I think the update was good, but my sense is that the quarterly numbers, you might see a bit of pressure on the margins. The street is working with some 8.2% kind of a margin. The actual margin will be much less. So, which is why probably we are seeing weakness in the stock. And I think the disruption broadly is also very much there. So, I don't think there is a case for buying into something like DMart at this point.
Okay, all right. So the operational update was good, but that can be a margin miss. Well, we appreciate you joining in, both Rupen as well as Hemang. Thanks a lot for joining in and filling us in with your take on the markets. Well, let's wrap up the day. Then it was a down day. The Nifty staged a bit of a pullback, backed by TCS, Tech Mahindra, HCL Tech and Wipro. They put in a fight actually for the bulls. The tech index on the whole was the lone ranger in today's trading session. What didn't do well? Shriram Finance getting smacked down 5%. IndusInd Bank, downgrade coming in from Goldman Sachs. That stock got clobbered. Adani Enterprises stock down 4%, NTPC down another 4%, and BEL as well did take a knock in today's trading session. The problem actually is not the headline index. Yes, we were down only around 0.3%. The problem is in the broader markets. Mid-cap index down close to 2%. You had one stock that was advancing, 5 stocks that were declining. REC under pressure, BHEL getting smacked. You had Z Enterprises that took it hard. And Kalyan Jewellers, take a look at this one. For the week itself, it lost 20%. And keep in mind that the operational update was very, very good. So now people are looking at valuations. There were questions raised with regard to some corporate actions. The management clarified the street didn't buy it. Hudco down another 5.5%. And Paytm, from 1,000 rupees, it ended the week at around 850 rupees. So that was the week for us. The headline index saw some softness, but the broader markets absolutely clobbered. The hope is that we are closer to the lower part of the range, at least on the Nifty. 23,000 important mark out there. I'll tell you what, we'll wrap up on this edition of Closing Bell. Don't go anywhere. Our weekly special Editors Roundtable comes up next.